Hey, this is Joshua.Kittel here with Opus Advisors, and I'm just doing this little video here to update my realtors and my clients and referral partners and anybody else out watching this video on some exciting changes that Fannie Mae just released the other day. That's really going to have a pretty good impact on home affordability or qualifications for a lot of buyers out there looking to go with a conventional loan. So let's go ahead and jump right into it. There's actually a lot of changes here, but I'm going to focus on just three big ones that has the most impact on most borrowers. And these changes are going to take effect with the update to their system on July 29th. So we still have about a month and a half before we actually see these officially implemented, but they are coming. I'm just giving you a heads up so you can know about it. First one is debt to income ratio. Currently the max debt to income ratio that Fannie Mae allows is 45%. So if you have debt ratio higher than that, you get a decline, or you're going to have to start paying off debt to try to qualify for the home, which sometimes is an option, but requires more cash to pay down debt that you otherwise wouldn't want to. Effective July 29th, this is going to go to a max of 50% debt to income ratio. So this just means borrowers are going to be able to qualify for a higher purchase price, or in the purchase price they were looking at, not having again to use extra cash to pay down debt to get that total ratio below 45. All right, the second change is coming that's going to have a pretty big impact is for those of you who are self-employed borrowers. Currently, Fannie Mae requires that a lender basically looks at 2 years self-employed filed tax returns and then use the most conservative method to determine what your income is. So if your income is increasing year over year, we do a 2-year average. If the income is declining year over year, then you have to give basically a letter of explanation as to why did the business decline, and then we use a 1-year average. And if the decline is too significant, they may view the income as unstable and then just not use the income at all. So the change that is coming is they're going to loosen it up, and it might be possible to receive an automated approval. This is a system that Fannie Mae uses that us lenders plug into all the time. But the automated approval comes back and says that we can substantiate that income on the application with just 1-year tax returns. That's a positive. One, less paperwork to chase down, 1-year taxes instead of 2. But also, if you have income that's increasing year over year, that 12-month average, that's going to be a higher average. Combine that with the 50% max debt to income ratio they've just increased to, a lot more purchasing power. If your income is declining year over year, not a problem. You're going to use the most recent year. If we get that 1-year approval, we don't have to write that letter as to why income was declining. Or if you had a significant decline, then it doesn't become an issue as far as income stability, because Fannie Mae says we just need to validate with 1-year tax returns. So that's great. So again, a little easier underwriting, a little bit more affordability for self-employed borrowers. All right, the last little item I want to talk about that's coming out on July 29th is just how Fannie Mae looks at disputed items on credit reports. Currently, for the most part, if an item is disputed, what that means is you've basically contacted a creditor and you said, I don't think this payment history or this balance or this credit item is correct. So it's in dispute. When that happens, even though we see it on the credit report, it's not getting counted into your credit score. So if you have an item in dispute that had a lot of late payments, those late payments are not negatively impacting you. And for this reason, basically the rule as it stands now is you need to resolve that dispute and then update the credit report, then rerun the file through the automated system. Well, with this new update on July 29th, there is the possibility, it's not a guarantee for every file, it's a case by case, but the system might come back through and say that it's reviewed the credit report, it acknowledges that these accounts are in dispute, but it accepts the report as is, and we can move forward, and we don't have to worry about chasing down paperwork to prove those disputed items or go through and try to update the credit report. So again, those are case by case. Both the self-employed income, debt ratio, everything's based on overall strength of the file. But these are 3 very positive changes that are coming down. It's very important for you to know about it. If you're looking for a home and you're were not able to purchase quite as much as you wanted to, come July 29th, that might just open up a little bit. So that's it for today. If you have any questions, if you need any assistance with your loan, please give me a call. I'll be happy to help you. And look forward to talking with you in the future. Make it a great day.